Thank you all for coming. My name is Simon Dixon, if we haven't met already. The main reason that we called this this gathering in a very Christmas atmosphere in a cathedral was because myself and Max have been speaking a lot over the last few months and few weeks about what we could do for the Bitcoin community. And Max has been doing a tremendous amount for the Bitcoin community, as I'm sure you all agree. What I would love to do is, in 2014, I'd like to get as much cash as I can into some of the Bitcoin-related businesses and Bitcoin-related startups. And I'd also like to hook you up with a lot of the investors that are interested in investing in Bitcoin-related businesses and Bitcoin-related startups. Now, the challenge with raising finance is that you've got to kind of mix with the traditional world of finance in order to raise some good cash. So what I'd like to do today in my section of the presentation is I'd like to give you a little bit of a shift in the world of finance that we're experiencing right now. And I'd like to show how you can be a part of that and really use some of the traditional methodologies that have been set up at the moment to get good money into business, and how you can use those from the alternative finance community. And one of my personal beliefs is that the combination of crowdfunding plus Bitcoin is a perfect marriage. And I'd like to share how that could look. And then after that, Max is going to give some content and share some thoughts with you about Bitcoin in 2014. And we'll take it over to some questions. And then we'll do some networking. And at the very end, I'd like to share with you an opportunity that we're working on right now, where we're going to be working with about 10 Bitcoin businesses very carefully and giving them the opportunity to pitch to some investors in 2014 to see what we can do to do something quite disruptive together. So I'd like to share that opportunity with you. So just before I go into the content, let me give you a little bit of a context of who I am and the journey to me being here right now. I actually came from the traditional world of finance, but my first introduction to finance was getting rejected for a job at 96 investment banks and financial institutions in the UK. One of the things I do in a different presentation is I've still got the rejection letters, because when I was applying, it was actually letters, it wasn't emails and online applications. I remember I was told that I wasn't educated enough, so I went and did a master's in economics and learnt a pile of shit for a year, basically. And then I reapplied to those 96 investment banks. Now I'm an educated master's and got rejected from 125 this time. After 125 rejections, I knocked on the door of this little place in Manchester called number 201 Deansgate. And at number 201 Deansgate was a broker's called TD Waterhouse. And TD Waterhouse was owned by one of the largest banks in Canada. And I got myself a job as a T-boy. And after 1 month working as a T-boy, I was a stockbroker. And after 6 months of being a stockbroker, I was on the London Stock Exchange making a market in alternative investment markets. After 2 years of trading and getting bored behind what's actually behind these numbers, I moved into the world of investment banking and corporate finance. And after a short career in corporate finance, I found my calling, and in 2006, I threw in the corporate ladder. I threw in the corporate towel, as it were, and I set up my first business out of a love for entrepreneurship and the disruption that can be created through entrepreneurship. After a long journey of working with getting lots of students and graduates jobs in investment banking through our company, we were a qualification company, we started really focusing on the alternative finance. And one of the spin-offs from the company, one of the people that worked for us at the time, was a gentleman called Ben Dyson, and he set up a institution, a not-for-profit company called Positive Money. Has anyone heard of Positive Money? So Positive Money essentially is the main movement in the UK for the ending of fractional reserve banking. They've created some really good press, publicity and attention towards that, and got some mainstream debates and put the word fractional reserve banking into the mainstream. It's got a long way to go because there's some big pressures there. But that was the first thing, that was kind of my first little exponential in alternative finance. At that time, I wrote a book called Bank to the Future, and I think it was And one of the chapters I talked about was alternative currencies, and that was my first introduction to Bitcoin, which was a number of years ago. And I can't remember what the price was there, but it was significantly lower than where we are today. And then I remember going to Czech Republic to one of the very first early Bitcoin conferences where Max was actually hosting a presentation there, and that was our first introduction. And then after doing lots of TV shows and press TV and stuff like that, we finally got together when Max moved to London to discuss how we could do something really interesting and really disruptive in 2014 with the Bitcoin community and crowdfunding. So that kind of brings us where we are. Oh yeah, in the middle of that, I found a company called BnkToTheFuture.com. BnkToTheFuture.com was the birth of, we wanted to create an investment bank that was built upon transparent crowdfunding principles. And it took us about 2 years in compliance to get FCA authorized. But we launched an equity crowdfunding platform. Essentially, it's like, for those of you familiar with Dragon's Den, it's kind of like an online Dragon's Den, where you as a business, you can pitch, and anyone can buy shares. And that was the important part for us, is that anyone can buy shares, but that took massive lobbying. We had to lobby and change the rules at the Bank of England. We had to change the rules with the Financial Services Authority at the time, now the Financial Conduct Authority. And we had to lobby for some interesting tax structures, which may sound geeky, but I'd like you to get really excited about these tax structures for 2 reasons. Firstly, if we can structure these correctly after the end of the presentation today, it can drive a shitload of money into the Bitcoin community. And the beauty is that it won't come from vulture capitalists and financial institutions. It will come from people that are interested in stimulating the Bitcoin community. And the other thing is that as an investor, I'd like to show you how you can invest in some Bitcoin-related businesses and potentially get about 85% of what you invest back from the government, and in order to get a load of money in there. Now, I know it sounds really geeky, but I'm going to save the geeky bits for later, and I'm just going to go through the essence and of what we can actually do with this. So there we are. That's Bank to the Future. We've raised about, we're approaching getting about £1 million into the startup community, and 2014 is our year. 2014, we're going to do a lot more damage in that environment. So what I'd like to share with you is firstly the background and context from both an investor perspective and a business raising finance, and the shift that we're actually experiencing right now. And I remember a while ago I gave a presentation about the shift in worlds that we were experiencing. And it was a shift from what I call the BC world to the AD world. And the shift from BC to AD had nothing to do with Jesus Christ and everything to do with the financial crisis, because it happened around about 2007. And in 2007, we shifted from the before crowdfunding world to the after debt crisis world. And what I'd like to show you is the dusty old world called the before crowdfunding world, and show you what that looks like so that you can see from the context of both an investor and a business raising finance where we're going over the next few years and what the challenge is. And the best way of showing you the before crowdfunding world is from the journey of an early stage business and what it used to look like in order to get that business financed. And what I'd like to do is show you the difference between a sandwich shop and the pret-a-manger. And the pret-a-manger goes up this cycle in the before crowdfunding world, and the sandwich shop kind of stays here. So the first thing is that there's 3 trends right now, 3 trends. One of them is global, and 2 of them are 100% unique to the UK. And this is why it's so exciting to be a business in the UK right now. The first trend is that globally, we've seen a massive shift in the cost base to starting in business. And this is one of the main reasons why we've got so many businesses in here and the Bitcoin movement has actually gone so far. Because essentially, what I'm trying to do is leverage a traditional world and get that into the alternative finance. And the traditional world of finance, essentially Silicon Valley, has paid the bills for the last few decades to produce some of the most interesting technology that's allowing us essentially to start businesses on a shoestring. So for the first time in history, we've got access to global distribution television channels through YouTube. For the first time in history, we got access to global distribution networks through Twitter and Facebook. For the first time in history, we don't need an office anymore, we got Skype. And for the first time in history, essentially Silicon Valley has paid billions and billions and billions for us to start businesses on a shoestring. And the reason that not so long ago we had 600,000 businesses in the UK, and now we've actually got 4.8 million businesses approaching 5 million, and 60% of all jobs come from the small to medium-sized businesses. It's produced this interesting environment where the government have recognized the future of our economy is small to medium-sized business. And so what we've done is we've got this trend where the cost to starting in business has shrunk to an internet connection, a laptop and a smartphone. Raise your hands to me if you have an internet connection, a laptop and a smartphone. Well, there's your startup cost. It used to be a factory. It used to be staff. It used to be an overhead. It used to be trucks. It used to be all sorts of stuff. But we've shifted from the Industrial Revolution to the revolution of internet connection, laptop and smartphone as startup cash. And so what's happened in the dusty old world of the before crowdfunding world, to get a business started, you needed some serious capital. When Max created the Hollywood Stock Exchange, I'm sure there was some pretty big capital required to do that compared to what it might have required to start what Max will be sharing with you later, StartJoin, a really exciting, new, interesting venture that we're going to be sharing with you. But the cost used to be really hard. It used to cost on average about 50K to get started. So even the startup stuff, even the startup just getting a business started, either you had a good job and you saved it, or you persuaded your parents and your friends to take a big risk on you. And most people in most circumstances, unless you happen to have rich parents and rich friends and family, getting that 50K and asking your parents to make a big risk on you for that 50K was actually life-changing in the relationship of the family if it went wrong. Most of the time it does go wrong. So it's slightly challenging. That was the traditional way of getting started. Now, if you got yourself in a position where you got that 50K together, and then you went out and you managed to generate some products and you managed to generate some sales, then you used to go to this horrific too big to fail institution that used to exist called a bank. And the banks in this world, essentially, let me give you a little tip if you're in the most unfortunate position right now of being a business for whatever crazy reason of thinking that you need finance from a bank. And if you need finance from a bank, you're just pitching two things. Here's a little tip. They don't have a clue about your business plan. They don't know what a business plan is. They've never set up a business. Okay? What they're looking for, you're looking for you demonstrating your ability to repay interest and loan. Okay? And that means you need a proven track record of cash flow. So if you haven't got a proven track record of cash flow, how are you going to prove your ability to repay? Okay? The second thing they're looking for is security. And the security means that if it goes wrong, they're looking for, can you repay your interest? And have you got the security? Okay? And your security means your house, your wife, whatever you got, they'll take it when it goes wrong. Okay? So that's what you're doing if you're pitching a bank. Forget about the business plan. There's a little tip for you, but I'd like to show you a new and interesting opportunity that doesn't actually involve the bank. Now, if you got to this point where you had the cash to get started, you built a product, you generated 2 years of cash flow, you generated some sales, then you used to have to go to these rich people called angel investors. And the problem is that with the angel investors, particularly in the UK, we have a very different angel investor in the UK than they do in America, but we have a very risk-adverse angel investor in the UK. And the angel investors essentially, if you worked in investment banking, then you'd be okay to get angel investor money and you had a good enough network to do it. Or if you had a friend in the family that was very wealthy, the type of person you used to look for in the before crowdfunding world to invest in you, essentially was someone that had the following net worth. So the average angel investment used to be about 100 grand in the before crowdfunding world. Any angel investor that knew what type of product they're investing in with a business would know that it's a high risk, high return asset. And so therefore they needed 10 businesses in order to diversify and do a sensible thing with that. So therefore they needed about £1 million to invest. And any angel investor would know that this would only be about 10% of their portfolio. So therefore they needed about 10 million net worth in order to be in the game of angel investing. You know, the sensible people. You might have found people that would put a big chunk and punt on it, but most of the time, now how many of us, you know, have a good relationship with somebody that has an investable portfolio of about 10 million? You know, some of us do, but not all of us do compared to the number of us that are looking to do something, okay? So then what happened is after you managed to get your 50K together, risk your family, then put your family up as security and your house up as security, and then get the cash flow, and then have a product, and then persuade a millionaire. You know, I was fortunate enough in my last business to have a billionaire invest in me, but it was pretty God-going work. It took 35 calls to get through to the guy that I wanted to get through. Then you had the angel investor, and then you reached the promised land. And the promised land was that you reached the world of institutional money. And the world of institutional money is essentially the world of them taking your money and doing loads of shit with it, putting it, recycling it, dicing it, putting it through all different products. Essentially, it's your money that they're investing in the venture capital market through your pensions, through whatever it might be, okay? Now, the difference between the venture capitalist and the angel investor is the angel investor is spending their own money. The venture capitalist is spending your money or someone else's money in the, you know, the crazy pit of what happens in our financial system. And a tiny percent of it goes to the venture capital market. And the venture capital market is not looking for ventures. They don't invest in ventures. They look for businesses that are already completely proven, with completely proven track records, with technology that's flying already. And essentially, they look for the businesses, you know, that have already, you know, completely on the trajectory path. Less so in America, definitely in the UK. But the thing is that the venture capitalists would always look for a referral from an angel investor, so therefore you had to have the high net worth individual invest already, because they can't be asked to look at business plans from everyday people, because they just got too much deal flow, too many people. But once you hit the venture capital, here's the thing. Raising $1 million, $5 million, $25 million, $100 million, $1 billion is the easiest finance you'll ever raise if you've got your business in that position. The hardest finance you'll ever raise is your first 50 to 100K, the below £1 million raise. It's always been the hardest finance to raise. So then the venture capitalist, once you got there, you've then got access to the vast array of different financial products like private equity. Private equity is when you need your 25 million. And then you can go public and you can do an initial public offering. And then you can raise billions through the debt capital markets. And essentially, the only difference between the sandwich shop and the Pret-a-Manger was that they figured out how to package their business in a way where institutions, rich people, private equity houses, and the public markets could understand their business, and it could be pitched to the vast array of cash that's available through the financial markets, okay? And that was the promised land, and that was the entrepreneurial journey to creating a really successful company. But then what happened is all of these markets started to seize up in 2007. All of these ways of raising finance. Firstly, there was never a well-structured way, repeatable way for you to raise less than £1 million for an early stage company. So then came 2007, and in the 2007 after debt crisis world, I've already pointed out, I didn't even say what this triple F is. Triple F stands for friends, founders, and family. If you speak to someone else, they'll call it friends, fools, and family, but it's a triple F round. The triple F round reduced to nothing more than £1,000, the internet connection, the laptop, and the smartphone. And with your internet connection, and with your laptop, and with your smartphone, you had the ability to create video, and with that ability to create video, you had the ability to upload it to YouTube, and with the ability to upload it to YouTube, you had the ability to put it on a crowdfunding platform. And for those of you, I'm sure you've seen crowdfunding, but just in case you've been stuck in under a rock for the last few years, crowdfunding essentially, it was created by the independent movie making industry. Independent movie makers found it exceptionally hard to raise finance, but what they could do is create video, and really good video. So what they used to do is they found this way of putting it on a website called Indiegogo originally, that was later copied by Kickstarter, that you all might have heard of. And essentially, you put it up on a crowdfunding platform, And with that crowdfunding platform, you offer some kind of reward. So the movie used to say, give me a tenner and I'll invite you to the movie premiere. Give me 100 quid, I'll invite you to the movie premiere and I'll feature you in the credits of the movie. Give me £1,000 and you're the non-executive producer, okay? And then businesses caught on to this, and businesses saw the potential of actually raising capital without actually having to give away equity, without having to interact with the financial markets, and without having to borrow the cash. And so some of the typical examples that you'll see, you might have heard of Pebbles Watch. Pebbles Watch is a company that went to venture capitalists, and the venture capitalists said no. And so they created a video and said, here's our team, here's the watch we want to create. And that watch was a watch that speaks to your iPhone and does some funky stuff, or your Android or whatever it is. And they said, we're going to sell this thing for $200. But if you give us $150 now and we raise 100 grand, then in 9 months we'll give you the watch. And essentially, after 64,500 orders, $10.3 million was in the bank, and they had to close it down because the public said, we want this watch. And a lot of people wanted it. Now, that's not typical crowdfund. The typical crowdfund is around about 10 to 20 grand or so, okay? But that's an interesting story of what can happen when you leave the people to decide what actually gets funded. Essentially, it's like a forward contract. You're saying, I'm going to deliver this, here's the reward, and you create a video and do it very productive. In the Bitcoin world, you might have seen Dark Wallet very recently featured on the Keiser report. You might have seen George Galloway very recently featured on the Keiser report that crowdfunded his documentary on the killing of Tony Blair. And you might see him very recently on a new company that's going to be coming in 2014 called StartJoin. There's going to be something very interesting that you'll be seeing there. And so essentially this was the birth. This was the model that started to take off. But then came along in the UK, and in the UK we were lobbying for years, a group of us. I'm a director of the UK Crowdfunding Association, and it's about 24 members of us. And originally there was about 3 or 4 of us who were all lobbying to create the perfect environment for essentially bringing what we considered the public markets available to the early stage business. And we created what we call crowd investing. Actually, I think I've got, my new slide actually switches the order. So let me just wing it for now. Just ignore, pretend you're not seeing that. Crowd investing, equity crowdfunding, was invented in the UK. And essentially it required the regulators to change their rules of who could invest in businesses. Equity crowdfunding, as I've already said, which is where Bank to the Future plays, is when you need to raise that extra cash because you may not have the rewards that you could offer through a crowdfunding platform, or maybe you're a business that not necessarily everyone wants hugs, kisses and t-shirts in order to give you money. So you offer shares in your company to investors. Now, it used to be in the UK punishable by a 7-year prison sentence if you pitched your business to someone that wasn't rich. You had to get the rich people to sign a contract, and you had to give £35,000 to an FCA or FSA authorized firm in order to legally verify and approve your business plan as what we call in the UK a financial promotion. So therefore, if you're raising 50k, what kind of hopes and chances did you have? The only one was to break the law, which is what most people actually did. And that was to go out and pitch people without doing it in a compliant way. So in came equity crowdfunding, and we have just written into the rules that now, for the first time in history, we have democratized investing in the UK. Now anybody can be an investor, and anyone can invest as little as £10 in a company and actually get shares in that company without breaking the law. Not only that, but we created the perfect environment in the UK in order to do this. When I first started this presentation, I said that the cost of starting in business has shrunk, and we've now got 4.8 million businesses. That means as an investor, the access to deal flow has never been larger in terms of opportunities for you to invest. But there was 2 other trends that came as a result of our lobbying. The first was HMRC, Her Majesty's Revenue and Customs. HMRC created the best, the most generous tax structure you will ever have come across, the envy of the world for UK limited companies and for people paying tax. Essentially, they said, if you invest in a company that qualifies for this tax scheme, and there's all sorts of caveats to qualifying and you need to go through a bit of a rigmarole, but if you invest in a company that qualifies for this, and this is where I think you should all be listening as businesses and investors. Firstly, if you've paid any income tax, you can claim back 50% of what you've paid to the amount that you've invested. So let me say, I'll give you a little bit of an animation later that explains as well. But essentially, you can, so if you invest $2,000 in a business, or you pitch someone and they invest $2,000 in you, if they've already paid $1,000 in tax, they can claim it back, $1,000 of it from the government. This is the only way to actually claim back the money that you're already paying if you have a job. Who's paying income tax in the room today? Interesting. Well, for those of you that are paying income tax, you can claim back half of it by investing in another business in this room if we can get them qualified for SEIS. And we've got to just go through the rigmarole of the process in order to do that. Okay? The third trend is that through equity crowdfunding, the FCA said and stamped their approval and regulated a few of us platforms, including BnkToTheFuture.com, to have the first process whereby anyone can invest in a compliant way and you don't have to be rich to invest. And that was the key hurdle and point because they wanted this to be a game just for the rich. Okay? So, that's all changed now. So equity crowdfunding exists in the UK. We're leading the sector. We're leading the industry. America's trying to catch up. They're making a bit of a bodge job of it. And for the first time, we're kicking Silicon Valley's ass in terms of the environment to actually do this. And so that was equity crowdfunding. And finally, there was also, so this is the other way around. Once you're an established business and you're generating cash flows, fuck borrowing from the bank, you can just borrow from people. And that was the invention of peer-to-peer lending and crowd lending, I call it. Essentially, they said, if you've got savings, you could leave it in a bank for 0 point whatever interest, and they could take that money and they could leverage it up, and they could put 40% of it into property and 40% of it into financial speculation. They could stick it in an investment bank. They could create all sorts of products where they get a commission all the way. They could slice it and dice it, create derivatives, and that was extremely lucrative and profitable for your deposit money. And so 40% of everything that you deposited at a bank went through that process. But instead, you could actually lend it to a business. And when you lend it to a business, you could be diversified across lots of different credit-worthy businesses who have all been through a credit risk model, and essentially you can get a higher interest and you become the bank. You get a higher interest, the person that's borrowing the money gets it at a low interest, but it's only credit-worthy businesses that have been through the thing that used to lend, banks used to lend to. And so for the very first time in history, we have well-structured, well-defined processes for starting a business, funding an idea, taking that idea and selling shares to everyday investors, and then investors getting massive tax breaks, and everybody's an investor, so you don't need to call yourself an investor anymore, can get massive tax breaks by investing in companies that they like, and then once a business gets a bit further down the line, they can borrow from the people rather than borrowing from the bank. And what I want to see is I want to see these models push further and further and higher into these institutional models. I want to see Manchester United say, fuck going public, I'm going crowdfunding. I want to see the companies that would have gone to venture capitalists saying, I'm using equity crowdfunding because I'm fed up of those vulture capitalists pull my pants down shares offers that they often offer to businesses that are in this environment, that essentially they couldn't give a shit about when you were small. They only give a fuck about you once you're actually flying and you're on the, you're on the trajectory path. Okay? And I want to see this go push and push and push and push further. And so that's essentially the play that we're playing on. So most of the businesses that I think the interesting opportunities to raise finance and is to create a community of people that essentially would look to claim back some tax through SEIS investment schemes and get as much Bitcoin-related businesses qualifying for these schemes and going through what is a pretty traditional process, but raising it through these different crowd finance models so that we can build and develop the Bitcoin community and the Bitcoin infrastructure in order to take it through the growth that it needs to go through in 2014 with this incredible, unbelievable scenario that has already been created by many of you in the room today. And that's what I'm really excited about. So that's the beginning bit. And what I just wanted to do is this is actually part of a 3-4 hour presentation that I normally give to businesses on getting themselves fully investment ready. How's that for a few slides? What I want to do is just give you a little bit of an intro into what you're going to need to do in order to get yourself ready and positioned for this truckload of cash that's going to be coming into the people that are ready for it in 2014. And also the fact that Bitcoin has got this massive amount, oops, don't know what that is, this massive amount of attention that's going to drive a lot of attention in investment into the Bitcoin environment. But what I'd love for you to see is give it to the people rather than the vulture capitalists that are probably sniffing around, and it goes into the dark death of the financial system that we all know about. So I'm going to I think what I'm going to do is I think that's enough from me. I'm going to pass over to Max to share some of the things that he's up to. And some of the opportunities for Bitcoin investors and businesses raising finance and his outlook for 2014. I don't think I've given him that brief. Did you know you were talking about that, Max?
That's all new to me.
Okay, all right. But Max doesn't follow instructions well, so.
Okay, well, I have no slides. I have none of my balloon animals either. Sometimes I do on my TV show, or any of the other things I do in my TV show, like rip off my clothes. And I too have an interesting background. Back in the 1970s, I worked as a go-go dancer at a lesbian bar.
I knew I recognized you.
Yeah. Then I started on Wall Street, which, interestingly enough, was kind of similar in a lot of ways. Similar work. And I did that for 8 years. Then I took 5 years off, went to Paris, hung out for a while. Then, yeah, as Simon mentioned, I ended up in Los Angeles. I created the Hollywood Stock Exchange back in 1996. I had to invent some technology to make sure that worked, the virtual specialist technology, which is a way to trade virtual currencies. I consider myself to be something of the Satoshi Nakamoto's grandfather, basically. The Bitcoin it builds on a lot of the work that we were doing back in the mid-1990s. And it is really taken the world by storm, and rightfully so. And since 1694, with the creation of the Bank of England, people have been trying to figure out a way to get away from the Bank of England and its practices. As a matter of fact, Ben Franklin, one of the founding fathers of America, said that one of the primary reasons there was the Declaration of Independence, there was the War for Independence, was to get away from the Bank of England. And that's why in the U.S. Constitution, it makes a reference to money being only gold and silver, because, again, they're trying to get away from those naughty practices that we all have become familiar with central banking, whether it's the Bank of England, the Federal Reserve Bank, Bank of Japan, the European Central Bank. Central banking is dangerous in many ways, and it tends to move vast wealth up. It's a trickle-up scheme, and you see the results today. You have this enormous global schism between the top 0.0001% and everybody else, and that's enabled pretty much by the central bank. Folks have been trying to do battle with the central banks, primarily in the gold and silver market, but Gold and silver, of course, have been financialized, and derivatives that are based on gold and silver. And you see what happens in the paper silver market right here at the London Bullion Markets Association, where for every ounce of gold, there's 100 ounces or more of paper gold. Same thing in the silver market. So whenever somebody comes up with an order to buy an ounce of silver at the LBMA or the COMEX in New York, they're met with 100 sell orders. And these are paper orders, counterfeit orders, completely uncollateralized, completely illegal, and yet the situation goes on. There's been a number of investigations, HSBC's involved, and there's been whistleblowers, and these have gone to various stages of being prosecuted, and then somehow, magically, they always kind of peter out when push comes to shove, and the system perpetuates itself. Then along comes Bitcoin, which is a fantastic innovation. We know what happened to the music industry when P2P file swapping came around during the Napster era, and it completely disrupted the music industry, and it completely transformed the music industry. It turned the RIAA, the Recording Industry Association of America, and the MPAA, the Motion Picture Association of America, became very aggressive, not only as lobbyists, but they actually became very aggressive in tracking people, in prosecuting people who were exercising their constitutional right of fair use. They were hounding people. And so there's this huge battle in the copyright industry because of this hugely disruptive technology, P2P file swapping, that started with Napster and has had many, many iterations since. It's a losing battle. The intellectual property cartel will never win this battle. There will always be a Pirate Bay or a Pirate Bay clone. And so the comments that I made for a conference in Los Angeles back in 1998, 1999, in front of a bunch of Hollywood executives, that they will always be competing with a price point called zero. And they need to, wrap their heads around this. And instead of innovating and coming up with new products, they tended to take a very aggressive legalistic approach, and it hasn't really served them that well. But the model of a P2P network of intellectual property being swapped over the frictionless internet is one that now is being applied to money. And as such, we have a new innovation in money, a new chapter in the history of money with Bitcoin, which is a decentralized P2P file swapping ledger where people are effectively doing to central banks what Napster and its subsequent technologies have done to the music and movie industry. As Simon Dixon has pointed out, in the UK and in London, there is some unique opportunities. Crowdfunding or equity crowdfunding is really unique to the UK. It's not in the US, it's trying to emerge in other countries. But the world leader in information technology, financial technology, and crowdfunding, equity crowdfunding, is really London and in the UK. And BnkToTheFuture is one of the top players in equity crowdfunding. And this is really, again, a way to leverage that network, leverage the global participation in something like crowdfunding to the betterment of those who are involved, to the detriment of the established status quo, the investment banks and the online banks, the central banks, et cetera. If you add Bitcoin to the mix, I think you've got a real powerful cocktail of disruptive technologies where now you can effectively raise money for Bitcoin startups, and there's going to be room for hundreds of Bitcoin startups in the next year. And this is going to be, I think, the story of 2014 will be these various Bitcoin startups that are in the pipeline now will be going public, and they'll be achieving very large market capitalizations. These can be all crowd-funded or seed-funded using the BnkToTheFuture platform. And it's very, very fresh, very new opportunity. And Wall Street has been pretty much asleep at the switch up until, I would say, the last few weeks. There was a report out from Merrill Lynch today from one of their top analysts who finally made a comment on Bitcoin, assessing a value of roughly $1,300 per Bitcoin, and making comments to the effect that Bitcoin should achieve some some market capitalization that's similar to silver, making reference to another hard currency, talking about the ability of Bitcoin to be penetrating in the global commerce industry and a couple of other metrics. And using those metrics, they came up with a $1,300 fair market value of Bitcoin. Having worked on Wall Street myself for many years, I can tell you that this is just the opening salvo. Merrill Lynch would like to be the lead Wall Street Bitcoin player. So that $1,300 fair market value, I'm pretty sure within 2 or 3 weeks or within a month, they'll put out a report saying, oh, the fair market value is $1,500. Oh, it's $2,000. It's $3,000. Because they want to chase this dragon up to the heights that it will achieve, and they want to be the main Wall Street name behind Bitcoin. They're making a play for that. And so I guess the other Wall Street banks are going to have to follow suit because this is going to be a highly competitive market. We've seen the hedge fund market also. The hedge fund business is a multi-trillion-dollar industry. There's a few thousand hedge funds around the world. And just this past week, Hugh Hendry, who's one of the hedge fund managers here in the UK, he runs a fund called Eclectica. He made a comment that he thinks Bitcoin could go to $1 million per Bitcoin, but he can't buy it. He can't participate because it's not listed on any formal exchange. The only way to acquire Bitcoin is through alternative means, not through any formal exchange. So now they have the hedge fund community. Now, to be competitive in the hedge fund business, you're going to have to look at Bitcoin and figure out how to get into Bitcoin. That's a huge buying pressure coming in to support the current price. So now all the pieces are coming together. The major players, Wall Street, Citi, right here in London, all these startups. You've got a Bitcoin trust in New York called Bitcoin Investment Trust from Second Market, which is the firm that brought the pre-IPO trading in stocks like Facebook and others. They're now making, they have a trust where people can buy these high net worth individuals. In Malta, there's a trust put out by a prime broker named Exante. And within a few weeks of launching these trusts, they've raised $20, $30, $40 million in Bitcoin pretty quickly. And so as an asset class, it's becoming highly attractive, very interesting. And again, if you mix that with something like crowdfunding and equity crowdfunding here in the UK, which is unique to London and the UK, there's going to be some huge opportunities. So to give you an idea of what I've been doing recently in the space, as Simon mentioned, we met up after kind of being in the same, bumping into each other for the past few years, starting at Prague at a Bitcoin conference. And then we've done some things on TV, and I support Bank to the Future. And for example, we figured out we just sat down within 2 or 3 hours, we put together a new company called CrowdVane, which is going to be equity crowdfunding for musicians and other artists, using this incredibly generous tax scheme, again, unique to the UK. So a friend of mine who has access to, who manages dozens and dozens of bands, here's a way to raise money for these bands, get the tax advantage, get equity crowdfunding. So for the price of a ticket or a price of supporting a band, you own a little piece of the band. So this is a new model. This is interesting. It supports the arts. It supports the band. We just launched that within 2 or 3 hours, and we had things running on Bank to the Future the next week. So that's one of the messages of this new economy and this new technology, is that you can throw things together pretty quickly. As Simon was alluding to, the cost of putting up new businesses is a fraction of what it was. When I started the Hollywood Stock Exchange in 1996, we spent $600,000 on the initial iteration of the technology, and we raised $40 million in venture capital. And that same technology iteration that spent $600,000 on in 1996 could be done today for probably less than $20,000. At that time, we had to actually invent the technologies. As I mentioned, I have several patents in technology. I had to invent the technology. Then I had to hire an integrator, a technology firm, to actually build the technology. I had to manage the technology. This went on for two and a half years, and used 15 engineers. We had the Hollywood Stock Exchange at one point had 150 employees, and it was today the same thing can be built and replicated for less than $100,000, just because the cost of this technology is so cheap. The cost of technology across the board is always getting cheaper, whether it's storage, bandwidth, or processing speed. All of those main components of technology are all going down what's called the asymptotic curve towards zero. As I was saying to my Hollywood associates back in the late 90s, everything's approaching a price point called zero. And now we have that happening to money itself. You can move money around for no cost. A couple of weeks ago, somebody sent $150 million using Bitcoin from point A to point B on the globe. If they tried to do that with any of these major banks, they would have spent, and we shopped around figuring out what the cheapest price to move $150 million in the world from any bank. The cheapest price we came up with was $200,000 was a fee to move $150 million. The cost of moving this over Bitcoin was 39 cents. Now, one of the comments was pretty funny because somebody said, who gouged him for that extra 25 cents? So that if you look at that, the economics are quite scary. I was on Newsnight recently with a couple of weeks ago, and we were discussing Bitcoin, and I was with somebody who was in the business of sending money through the wires, through Forex. And it became apparent very quickly that their entire business is going to be challenged, if not disintermediated, which is a fancy word to say blown out of the water, as well as Western Union and all these other money-sending shops. They're going to go the way of Blockbuster Video that just got blown out by Netflix. Other things about Bitcoin that are going to be challenging are companies that do service the purchase of real estate overseas. You know, it's very intensive in terms of the deeds and the various documents that go with purchasing real estate. There's a lot of redundancy because if you're purchasing a property overseas, there's documents in Britain that have to be translated and put back into France or Germany or wherever you're buying this property, and it adds up tens of thousands of dollars just to kind of put the paperwork together. By putting those documents and connecting them to the blockchain, which is the central ledger that tracks all of the Bitcoin transactions since the Genesis block. Oh! I figure since we're in a church, I'd throw that in. Again, the cost of all the paperwork to do a real estate transaction approaches a price point called zero. It's free. So all those people that are in that business now are going to be out of business. You can use something called colored coins, which is you can mark a Bitcoin and do stock offerings based on that Bitcoin. So now stockbrokers are going to be challenged. So there's going to be a lot of jobs are going to be completely changed, and a lot of people are going to have their careers, have to deal with this. And I think based on this Merrill Lynch comment today, Merrill Lynch is finally coming around and to the fact that they're going to have to either adapt or become extinct. So they, capitalism can be very Darwinian in that way, in that either you adapt or you become extinct. And I think some of these banks are starting to realize that if they don't pay attention to Bitcoin, they're going to go the way of the dodo. And so we see that right now, these comments coming from Wall Street, from the City of London, from the hedge fund community. But still, major media is well behind the curve. I think our show is the only show that's actually covered it for the past 3 years. And we've been doing a lot of coverage. A lot of people started businesses after they've seen our show. And we still get feedback today. People have seen the show, interested in the guests that we've had on, and have dived into getting involved more into Bitcoin and everything that goes with Bitcoin. And finally, Simon mentioned another company that I'm involved with. Well, actually, two companies. I'll mention a company called Heisenberg Capital, which I started when I came here. Okay, it's essentially it's a private equity firm. We're in the empire business, and we have been making investments in Bitcoin-related startups. So we have invested, for example, in BitPay, which is one of the premier Bitcoin companies in the space right now. They're in the merchant processing. They'll be the PayPal of Bitcoin. Talk about PayPal for a second. Bitcoin is now already eclipsing PayPal in terms of daily volume of transactions. It's also soon to eclipse Western Union daily transactions. So the volume is really becoming quite enormous, and it's in the top 10 depending on whether you look at overall trading or merchant transactions, it's either the top 6 or the top 10 of all merchant processing in the world, including Visa, MasterCard, PayPal, go right down the list. And in the top 10 already is Bitcoin. It's already in the top 10. And yet still there's people who have absolutely no idea what it is, what's it all about. And it's in the top 10 already. So the trajectory here is I think we'll see this emerge in the top 3 very, very quickly, and since it's virtually free to move money, I can't imagine why anyone would use anything else. Is it going to be number 1 at some point? I wouldn't be surprised. So that's an enormous, enormous speed. So the Heisenberg Capital is buying interests. So if a company is listed on Bank to the Future, and after, as Simon mentioned, it goes through different periods of its life as an entity and different financing options. At some point, a private equity firm like ours could come along and say, okay, we want to take a stake in that company. So it's a little further down in the financing windows as you start from 0 up and you move up to the larger tranches of financing. The other company I've started just in the last few months is called StartJoin, which is a crowdfunding company. So it'll be competing with other crowdfunding sites on the reward side, not on the equity side. So it'll be similar to the ones mentioned previously. We launch in the next few weeks, and there will be a major Bitcoin element to that. So it'll be probably the only crowdfunding site out there that has a big Bitcoin component. And designing how to use Bitcoin in the crowdfunding was kind of challenging because there's still some technologies that need to be built and how to integrate those technologies. So I think we have a solution that will be attractive upon launch. And then, of course, we'll always be looking to upgrade and do things. And we have already people looking to invest in that. And so it's a very exciting space. So it opens doors. I think if you have a good Bitcoin idea, you will get heard. People will listen to it because everyone at this point is now looking for good ideas in the Bitcoin space. So if you can kind of wrap your mind around what it's all about and come back with some ideas, you can list it on Bank to the Future, you can go into meetings, you can get some funding. And I think, I'll close with one interesting story, and that is this company called BitPay, which I'm an investor in, and they took their first 2 seed rounds of financing, and they put all that money essentially into Bitcoin when it was still under 20 bucks a Bitcoin. So they probably won't need any more financing. It's completely self-financing. So you won't see any stock on offer from these guys, I don't think, until they actually do some kind of public offering at some point. But all their mezzanine financing, interim financing appears to be done. Because they are extremely Bitcoin rich at this point. And the story is just beginning. So I will end it there. Thank you. Thank you.